Hello guys, how are you doing? Welcome to today's class. This is going to be a continuation of our previous class. We are still on market structure. Today we are going to be talking about market structure and time frame analysis. And today we will be talking about market break on multiple time frames. In our previous class, we talked about break of structure and time frames, what are time frames, and so many other. Today we are going to be talking about how to mark your structure on multiple time frames. So now in our previous class, we simplify market time frame as higher time frame, middle time frame, and lower time frame. Now today we are going to be using these three simplifications of time frame. Now we'll start from the higher time frame. The higher time frame, we are going to be using 1 day and 4 hours. Remember when I teach you about time frame in our previous class, I said that time frames in candlesticks or in the market simply means that if you are in 4 hours, each candle, it takes each candle 4 hours to form. If you are in the middle time frame, which is between 4 hours to 1 hour, it takes 4 hours for each candle to form. If you are in 1 hour, it takes 1 hour for each candle to form. Even if you are in 1 minute, it will take 1 minute for each candle in that particular time frame to form. So now, for our higher time frame, we are going to be using 1 day, between 1 day to 4 hours. For our middle time frame, we'll be using 4 hours to 1 hour. And for our lower time frame, it's 1 hour down to 1 minute, but we won't even get to 1 minute. So probably for today's class, we'll be using only 4 hours, 1 hour, and 15 minutes. We are in 4 hours now. You can see it. We're in 4 hours. So for today's class, 4H is 4 hours. H is hours. I think let me explain something. Capital letter H like this is hours. Now, capital letter M is monthly. Monthly. Small letter m is minutes. Small letter m is minutes. Capital letter W is weekly. It's weekly. I hope we understand. So okay, capital letter D is daily too as well. So, but for today's class, we are going to be using only 4 hours, 1 hour, and 15 minutes. We are going to be using 4 hours, 1 hour, and 15 minutes only. So let's check the chart. Now I'm on a 4-hour time frame. This is 4-hour major structure. You can see that the market made a swing here, high, made a low, and it broke that swing. Now the market did something like this, break of structure here. Now okay, we are believing that the market has started reversing, then it broke this high. So now we are still on an uptrend, but in this junction, all these ones you see here like this are minor structure. So we are not going to pay attention to the minor structure. We are going to wait for the market to start creating another major structure. I hope we get. Now the market have started. This is a low, this is a high, this is a major structure. Now today we are talking about what? Time frame analysis. How to simplify and use multiple time frame in marking structure. So now, let me remove this. Now we have 4 hours here. We already mark our 4-hour structure. If you come to 4 hour and mark the 4-hour structure, the next thing to do is to go to a lower time frame. A lower time frame. So first step, mark structure on 4H. Let me keep this here. First step, mark structure on 4 hour. Now We already did that. We have marked our 4 hour structure. We're on a downtrend. This is a high break of structure. So we are on a downtrend. We're expecting this market to maybe retrace to this place and continue going down. Now, the next step is to mark structure on 1 hour. So mark structure on 1 hour. What you will do now is that you go to time frame and change it to 1h, 1 hour. Okay, now this is 1 hour. This is 1 hour. You can see now that this structure I left behind, I told you that is minor structure. On a 1 hour time frame, you can see that the structure are now bigger on the 1 hour time frame. So 4 hour minor structure are 1 hour major most of the times. So this 1 hour now, there's no big structure here apart from this one here. Now, the next step is that you should then go to 15 minutes. Mark structure on 15 minutes. Now you go to your time interval. I'm on 1 hour, that is why 1h is showing here. Now next you go to 15 minutes and still mark your structure. Now just note something. This whole swing here like this is a 4 hour swing. You can see as we are reducing the time frame, the swing is getting bigger. Do you know why it's getting bigger? It is because when we are on a 4 hour time frame, each candle here represents 4 hours. Now, when we get to 1 hour, you know that automatically each candle before was 4 hours. Each candle we have to divide themselves to 1 hour. It will now become plenty, right? That's 4. If you divide 4 by 1, it means that each candle, if this 4 hour candle, let me change the color to green. If this 4 hour candle, now when we get to 1 hour, each 4 hour candle we have to divide itself to 1 hour like this, right? It means that each candle like this now will give birth to 4. Each candle will give birth to 4. Now when we now get to 15 minutes, the candle we have to replace price with 15 minutes. That is why you see that the candle is expanding. If I even get to more lower time frame, let's say for example now I now go to 1 hour time frame, you see that the swing will be very big because each candle is now 1 hour. I hope you guys understand. On a 4 hour, each candle is 4 hours. On a 1 hour, each candle is 1 hour. And on a 15 minutes, each candle is 15 minutes. We are on a 15 minutes time frame now. We are on a 15-minute time frame. Now, this is 15-minute structure. This is 15-minute structure. Here, the market is not supposed to break here, but the market now break this place. It has broken this place, so this is a change of character. I already taught you guys about that in our previous class. Change of character. This is a change of character. Let me increase the text size. So this is a change of character. So now, another break here, right? This is another break. Let's keep following the market. So now, how do you know? This is just how to mark your structure on multiple time frame. First, you go to higher time frame. The way I went to higher time frame and I marked structure on higher time frame. You first go to your higher time frame and mark your structure. Then next, let's say I started with 4 hours. Next, I went to 1 hour. And next, I went to 15 minutes. Okay? So, if you want to mark your structure, even if you start from 1 day, you might start from 1 day, you come to 4 hours, maybe you come to 1 hour, or you come to 15 minutes. So, like that. Because when you are on a 1 day time frame, you might just see this as a very small structure you mark. When you come to 4 hours, you see other structures inside of it. Like in this 15 minutes now, you can see that there are still so many structures here. This is structure. This is structure. I hope we understand. So if you reduce the time frame you still find so many structures. So that's one of the reasons why we use multiple time frame analysis. So now, how do you know when this 4 hour swing, this whole 4 hour swing, wants to start reversing? You know that on a 4 hour swing, we're expecting the market not to break the highs, only the low. Now, like this, we are probably expecting this market to do like this too on a 4 hour, right? So how do we know when this market wants to start retracing? Like when the retracement wants to start. Please just pay attention. Now, how are we supposed to know when this 4 hour swing like this, when um this swing will start falling? Since the market is on a downtrend, we're expecting it to be falling downward. So when do we know when this swing wants to start falling? Now, it now depends on what 15 minutes do. Okay, now on 15 minutes, the market is going up now. Now, let's play price and see. Now, perfect example. This is a very perfect example. Now, how do you know when your 4 hour swing wants to start retracing? It's on 15 minutes or on another lower time frame, lower than the 4 hours. When you see 15 minutes give us a change of character here, that's a sign that that 4 hour swing you see wants to start falling. I hope we get. This is one of the reasons why you need to know how to use multiple time frame. So first, we started from 4 hours. We started from 4 hours. Now we know that, you see, well, now automatically you know that this market is now falling. Now we started from 4 hours. We saw that we already have a high and a low. And now the market is giving us another high. We know that anytime from now the market will start falling. Then we now go to our 1 hour for more clarification. For more clarification, on our 1 hour, we find out that there are still other structures here. We now say, okay, we marked them. Now we now went to our 15 minutes. In our 15 minutes now, we now have a break here. This break we have here now have given us a sign that this whole swing like this will start reversing. We start reversing like this. So if eventually, let's say I want to trade this market now, as I've gotten a sign here that this whole swing is now reversing, what do? I enter for a sell here and I start going down. So I hope we understand. That is just very simple and short. You can see that the markets have come down to this place. Is this a break? No, it's not a break yet. Remember, I taught you guys in our previous class about the breaks that are valid and the ones that are not valid. This is not a break. Why is it not a break? Because this is not a full body, it's a wick. Until a full body break this place like this, that's when we now say we now have a break of structure. So I hope we understand. This is very simple. I hope we understand. First, just follow this instruction. First thing, you go to your 4 hour, you mark the last swing. The last swing might be like this, a break to the upside. We know that we are bullish, right? Or a break to the downside. You can mark the previous swings, but the last swing matters. Then next thing to do is to go to 1 hour. When you go to 1 hour, you still find other structures like this on 1 hour. Then what to do next? Go to 15 minutes. When you get to 15 minutes, you still find other smaller structure. Yeah, other smaller structure. Now, how do you know when the market wants to reverse? It is when you see a change of character in that smaller structure. Then you know that this market wants to reverse. I hope we get it. So let me look for another example. Let's go to 4 hours and look for another example. Let's use this place. The feelings. Now, here's another place. This is another place. I think we use this one. So here now we have a break of structure here to the upside. First, this was a break. BOS, break of structure. Now, this was a break. Now, this market was supposed to come down like this and continue going up like this, right? But the market eventually break the low. The market eventually break the low instead of the high. The market eventually break the low. Now we know that, okay, the market is on a downtrend like this. It's on a downtrend. Now, all this little structure you see, this little structure you see, are both 1 hour and 15 minute structure. You can still trade them to the downside. But eventually, the market came back and break this high. This is our new break of structure. The market came back and break this high. So now we know that, okay, we are fully still on an uptrend. We are still on an uptrend. So what are we expecting now? We're expecting, now that we are on an uptrend, we have confirmed that we are still on an uptrend. This is a low. And then we now have a break of structure to the upside. What are we expecting? Based on our rules, we say that first is 4 hours. After 4 hours, next is 1 hour, right? And after 1 hour, next is 15 minutes. Now, we're expecting this market to do something like this and continue. This is what we are automatically expecting in the market. We are automatically expecting this market to come down like this and continue to the upside. So, what are we going to do now? Now, we're on 4 hours. We go to 1 hour. 1H now. We go to 1 hour. And you see what I told you? That those little swings you see are all 1 hour swing. You see, this is all 1 hour structure. You can even be trading this and still be making money. You just wait for high. Come here, you buy. And keep going up. So, like I said in one of our class, in the Forex market, even if you are buying or you are selling, you are still making money. Now, we are waiting for this market to give us a change of character, just as it gave us in the other one, for us to know that it has started going down now. Now, next, we'll go to our 15 minutes. This is the 3 time frame we are going to be using: 1 hour, 15 minutes, and 1 hour, 4 hours, 1 hour, and 15 minutes. Sorry. So, we are waiting for this market to give us a change of character. I think we have one now here based on body breaks. But to me, I haven't confirmed it yet. Now, where is the last swing here? We have this, we have this, we have this, we have this, and we have this longest one here. So, the market will have to break this last one to give us a change of character. It will have to break this last one. So let's wait and see. Now, is this a break or is it not a break? It is a break. This is a break. Why? Because the market broke it with full body. You can see it broke it with full body. So this is a break. Now we have a change of character here. We have a change of character here. So what are we expecting now? Sell. Like this now, if you want to sell, you just look for your entry and you start selling from here. Because now this has given us a confirmation that this whole 4 hour swing, this whole big swing like this now, that this market broke to the upside, is now coming down. I hope we understand. So this has given us a confirmation now that this whole swing is now coming down. Remember, we used 4 hours first. We have a break to the upside. How do we know when this break will start coming down? We'll go to 1 hour and 15 minutes, right? Now, next, we now go to our 1 hour. We saw that nice structure here. Now, we'll focus on this one since our aim is that we are expecting a retracement. Now, we come to this place. Now, we now have a break of structure already. What do we do next, we know that the market is now selling. So we are automatically now expecting a sell in the market. Let me increase this so that it's going to be fast. Now, 15 minutes will start creating its own structures here. You see, 15 minutes also has its own structure. These are all 15-minute structure. So in market breaks, every time frame has its own break of structure. Let's say if you are using 1 day, if you go to 1 day, you will definitely see a break of structure in 1 day. If you go to 4 hours, 4 hours has its own break of structure. If you go to 1 hour, it has its own break. If you go to 15 minutes, same for 1 minute, same for others, 5 minutes, 30 minutes. So, but for the sake of this class, we are using just 3 time frame: 4 hour, 1 hour, and 15 minutes. So now, 15 minutes is already creating its own structure. So when you want to mark your structure, once you have marked your 4-hour structure, you go to 1 hour, you mark your 1 hour structures. Then you go to 15 minutes and mark your 15-minute structures. Like this now. I can take a sell from here to the downside. Here like this retracement now that happened after the change of character, I can just wait for this place, take a sell, and start going down. Wait for this place, take a sell from here, go down, wait here, take a sell, go down, until when I now see another change of character showing me that, okay, this market is no more going down, it's now going up. I will now wait and start going bullish. So that is just it for time frame analysis. Okay, now wait. Now our aim was that we want this market. Let me go back to the 4 hours. Our aim was that we want this market, since we have a break like this, we want this market to come back, right? Now, the market has already come back to this place. It has already come back. What's our next aim or target now? Now, we'll be expecting this market to continue to the upside, since we are on a bullish market. Since we are on a bullish market, the market is trending, right? It's trending. It's on an uptrend. I taught you guys about uptrend and downtrend. Now we know that the market is on an uptrend. We know that we are going to be looking for buys. Since this one has retraced back, now we are going to be looking for buys. I hope we get. So now like this. Now, we know that we are going to be looking for a 15 minutes or 1 hour change of character, right? Just as we look for 15-minute change of character here now, to know that, okay, this market is now coming down. The same thing, we'll look for 1 hour or 15 minutes on here to start going up. I hope we understand. So let's go down. Now we are on the 1 hour. How do you know when the market is going to be retracing? You go to a more lower time frame. A more lower time frame, TF, is time frame, to know when the market is reversing. Okay, so we are using 1 hour and 15 minutes. Let me go to 1 hour first. 1 hour, we have a structure here. Let's go to 15 minutes. Now I'm spotting something here. We have this. Just know that the market is not perfect. And now we have this. Now, this place has given us a minor change of character. This place. So anytime from now, we now know that, okay, we are expecting a bullish market. Let me still show you. This place. This is a change of character. Why? Because this place broke structure. Now, this long space you see here, sometimes usually happen in the beginning of a new week. We usually call it a gap. I will not talk about that now until when we get to advanced class. So here we have a break of structure. So this is a sign that this market is reversing because we have a change of character here. This is the last high that the market was not supposed to break and the market broke it. So we have a change of character here. We now know that, okay, this market now is now on an uptrend. It's no longer on a downtrend. The market is now on an uptrend. So we'll be looking for buys now. Now we know that, okay, the market is on an uptrend. What are we going to be doing? We are going to be looking for buys now. Okay, so let's wait for price to do its thing. I hope you guys are seeing it now. Are you seeing it? Let me mark our 1 hour structure. We already have our 4 hours. This whole swing like this, up and coming down, is our 4 hour structure. Now we now look for confirmation on the 1 hour and 50 minutes to continue going up. Now let me mark 1 hour structure here. I need to show you something. This is a break of structure, right? This is a break of structure, right? Full body. This one broke like this, broke this place. Now when we have this last swing high, there was no any other break here. No any other break here. But rather the market went up to break this one and break this one. That's not your number one sign that this market has started reversing. Now when we go to 15 minutes, let's mark our 15-minute structure. This is a high. Let me highlight it. This is a high, this is a low, this is another high, right? And if I will consider this minor structure, this one's, it will be like this. But we are focusing only on the major structure, as we said earlier. So I'll be using this low, this high, this high too, and this one. You know why? Because this was a break of structure. Okay. Let me delete this. I don't know why this thing must be even. This is the more valid break. Why? Is because this was a low, a high, and this was a low. This one now was another high. This last swing is not valid because it didn't break structure with a full body here. So this is our previous high and a low. This was where the change of character happened here. This was where a change of character happened. Now let's continue with our 15-minute swing. We have this, and this, and that's how the markets go, and will continue going up. So just know that when you come down to your lower time frame, what you need is a confirmation. If you see a confirmation or a reversal on your lower time frame, it means that your higher time frame is now reversing. Okay, so let's go back and continue to play price and see if our goal was achieved. Now you know that initially our goal was for this market to retrace like this. That was our initial goal. Now the market now retrace. Now our next goal is for this market to do what? To start buying like this, so that we can be buying, depending on where you enter the market. That's our next goal. So let's play price to see if our goal was achieved. You see it? Our goal was achieved. Let's go up to the 4 hours back. So we had a high, a higher low, and now we have a higher high, higher high, and now we now had another higher low. Now we have another break of structure, making this place a break of structure. This is a break of structure. So what are we expecting next? What is our next goal? Our next goal is to spot another reversal here on a 1 hour or a 15-minute. Spot another reversal here on a 1 hour or 15 minutes. Once you spot another reversal, you start selling again to any of these levels. When you sell to any of this level, your next goal will be what? To look for another change of character here to start buying. The sign for a change of character is CHOCH. Change of character. I hope we understand. There's nothing so difficult in this thing. You just have to master structure.